At only 22 years old, I won the World Trading Championship. Not a prop firm challenge, not a paper trading competition. The Robbins Cup, the oldest trading championship on the planet. My name is Gianluca Bruni, I'm from Sicily, I dropped out of university and I moved to Dubai. I did all of this starting from zero, with no capital, no mentor and no idea of what I was doing. This is that story, and if you pay attention, there are things in this video that will save you years of frustration, losing money and burn prop firm account. Before I became profitable, I lost money for 2.5 years straight. I lost money I didn't have. I missed the one trade that would have changed everything. I hid from my parents that I quit university for months. And I hit a point where I genuinely didn't know if I was cut out for trading. Most people would have stopped. I didn't stop, but more important, I changed. In this video, I will tell you exactly what I changed, why it worked, and what the trading industry got fundamentally wrong that keeps 95% of traders losing money forever. And I'm going to show you for free the exact strategy that made me profitable. So stay until the end of this video. I started trading in 2020. I was 16, still in high school in Sicily. I had no money. What I had was a phone, an internet connection and an obsession. I found a trader that was doing trading live stream, and probably you would know today as the world best scalper, and his name is Fabio Valentini. And for about 1 year I followed everything that he taught. Candlestick, price action, market structure, brokers, everything. All the basics. I thought that I was learning, and I was learning. But then he disappeared. He stopped teaching, and I was left with a year of knowledge, but I wasn't profitable yet. So for the first year of trading, I earned zero. Every birthday gift, every money that comes from my relatives, it all went to prop firm challenge, and the result was always the same, all lost. And here's the thing, I wasn't stupid. I could read a chart, I knew the concept, but I was trading with zero objectivity, zero rule and pure emotion. When I lost a trade, I would revenge trade. When I won a trade, I would overtrade. I had no edge, I had beliefs, but beliefs are not enough. I turned 18, I finished high school and I had a decision to make. And at that point, I had 2.5 years of losses straight. I wanted to become a full-time trader. My parents wanted me to go to university. I went to university. I moved to Bologna. My parents sent me 500 euro per month to live. I didn't spend it on food. I spent it all on prop firm challenges. I was getting better, still too discretional, still too emotional, but better. And then I did something that changed everything, in the worst possible way first. I saved money for months. I bought a 200k prop firm account. I passed phase 1 in less than 2 weeks. Phase 2, I was up 4% and the target was only 5. 1% remaining. One single target and I would have passed the challenge. That morning, I had a mandatory lesson to university. Attendance was compulsory. I couldn't skip it. So I left the desk, closed the laptop and went to classroom. When I came back and opened the laptop, I saw it immediately. While I was sitting in the classroom, the market had printed exactly the same setup of my strategy, a clean entry and a clean target hit. That I would have taken a trade, I would have closed in profit. That one trade would have given to me the 1% remaining. The challenge would have been passed. Instead, and I'm not proud of this, but I'll be completely honest, I sat down in front of that screen, saw what I've missed and lost my mind. I started opening trade at random. No edge, no strategy, no setup. Just desperation to recover the 1% remaining for past the challenge. And the result? I blew the account. And for the following 3 days, I didn't leave my apartment. This wasn't frustration about money. This was an identity crisis. I didn't want to be university, but at that moment, I thought maybe I wasn't capable of doing the only one thing that I wanted to do. But I didn't quit, and I made a very important decision. I stopped going to university. My parents didn't know it. And I built a schedule that I followed every day for 4 months without exception. 2 phases. First phase, pure research. Every morning from 8 AM, backtesting, building the edge and pulling up data. Every evening until midnight, more analysis, no exception and no weekends. Second phase, forward testing. Full trading session during the market hour, then data analysis from the close till 3 AM every single night. This is what no one show you about trading. Not the cars, not the charts, but the schedule. Now, here's the part that actually matters. What I was building. And to explain it, I need to say something that will upset most of people. Concept are a scam. Not the pattern themselves, the way they are taught. ICT, smart money concept, supply and demand, fair value gap, structure, these are real phenomena in the market. And I'm not saying they don't exist. What I'm saying is that learning the concept without a clear mechanical process to execute it, it will be useless. And here's why. Concept put ideas in your head. Then they leave completely up to you how to combine them. And every single day you have to figure it out by yourself. How many times did you heard a trading educator say this phrase? The concept work, the problem is you. You're not applying them correctly. And this is how they avoid accountability. Because the reality is, if you're relying on concept without a defined strategy, you're based every decision on intuition and gut feeling. And intuition comes from experience, and as a beginner, you have no experience. So, of course you lose money, and maybe you blame yourself after paying thousands of dollars for a mentorship that doesn't give you a real strategy, just a collection of ideas and a figure it out on your own. I had the same problem. I knew the concept, I could identify the pattern, but every time I saw a setup, I was guessing. Guessing the entry, guessing the exit, guessing the sides. Nothing was defined. Nothing was verifiable, nothing was replicable. So I stopped guessing and I started testing instead. Here's what I noticed first. In the London session around 9 AM, price would consistently drop below the Asian session range. Then they reverse sharply in the direction of the prevailing trend every single day. That is what known as Asian range manipulation. A lot of traders in the ICT and SMC space try to trade this, and most of them lose money doing it because they have no rule. They see the pattern, they feel like it's happening, and they click buy or sell based on intuition. I instead wanted data. So I took one hypothesis, one entry idea. What if I entered on an engulfing candle on the 15-minute time frame, the moment the manipulation reversal is confirmed, with a stop loss below the manipulation low and a target at the 50% of the Asian range or the opposite side? I didn't test it for 20 trades, not 50, not 100. I tested it across 15 years of market data, over 5,000 trades. Now, before I go further, I need to clarify something important. Because when the people hear mechanical system and 15 years of data and 5,000 plus trade, they assume I'm talking about an algorithm, but I'm not. An algorithm is a robot. It optimizes the past. It executes rules blindly, with zero ability to recognize when the market has structurally changed around those rules. What I built was different. There was always a small layer of human interpretation sitting on top of the data. Not emotion, not gut feeling, only rational judgment. The difference is this: when market shifts and markets do shifts, an algorithm keeps firing the same rules into a different market condition until it eventually bleeds out. I don't. I go back to data, I reanalyze, I adapt the model to reflect the new reality. The rules update, the calibration update, and the strategy evolves. Behind an algorithm, there's a code optimizing the past. Behind what I was building, there's a brain. Reasoning, questioning, and updating every single time the market gives a reason to do it. That small difference is what separates a mechanical trader from an algorithmic one. And in the long run, this small difference is everything. A lot of people dismiss backtesting. They say it's useless. Past performance doesn't predict future performance. But those people have never worked into an hedge fund. The entire professional trading industry is based on algorithm. If backtesting was useless, nobody would do it. The difference between a retail trader guessing and a professional executing is exactly this. One has data, one doesn't. I never never stopped testing my strategy, and the results surprised even me. I finally had something I'd never had before. A strategy that had proven itself profitable over 15 years of market data. No guesswork, no interpretation, no intuition, just data. But I didn't stop here. I went back to the data and formulated more hypotheses. Tested more entry model on the Asian range foundation. I found 3 more models that were equally profitable or maybe better. 4 entry model, all backtest, all verified. This is what I call prop killer. Not one pattern, 4. Each with its own defined entry, its own stop placement, its own statistical optimal target. The risk reward varied by setup. 1 to 3, it was the baseline. Up to 1 to 5, when the data says the extended target has a sufficient historical hit rate to justify it. The target is never chosen because I want more money. It's chosen because the historical data tells me which price level gets hit more consistently given this exact entry condition. Risk per trade for a normal operation was 0.25%. My strategy decides for me. I only wait for my edge to present itself, and then I execute it blindly. There's one more thing that I need to tell you about this phase, because for me it was the moment that proved everything. July 2022. After months of consistently performance, the strategy started underperforming. That month, I was 7% in drawdown, and I'll be honest, I was scared initially. I thought maybe the edge had stopped working. Then I remember what data said. I went back and checked the historical model, and a drawdown period of this magnitude was completely within the normal variance of the strategy across 15 years of data. So I kept trading exactly the same way. No changes, no panic, no oversizing to recover faster. And on August, I recovered everything. And on September, the strategy was printing money again. Think about what that moment used to look before I had data. A month of drawdown would have meant revenge trading, burned account, strategy hopping, oversize, and total despair. With data, it was just a Tuesday. That month, I published the drawdown policy, the numbers, the date, everything. Not because I was proud of losing, because hiding it would have been the easiest thing to do. After 4 months of building, I was ready. I bought a new 200k prop firm challenge, and I passed it in less than 2 weeks. First payout, $10,000. I had never seen that much money in my life. Second payout, $12,000. Third payout, $7,000. I sat my parents down and told them I hadn't been going to university for months. And I told them I wanted to leave, move abroad, and trade full time. At first, they said no. Then they saw the bank account and they said yes. Meanwhile, the trader who had originally taught me the basics at 16 years old had opened a trading education company, Morpheus Education. They were looking for trading educators with real and verifiable results. So I reached out, and they recognized what I built. And I did my first live session in front of hundreds of students. So that became my life. Trading in the morning and teaching in the afternoon. I started to travel. I went to Bali, I went to Maldives, I went to French Polynesia, and I moved to Dubai officially. Legal residence and 0 income tax. Over $1 million in prop firm account across 6 firms, and my highest record from a single firm is $66,000 from only 1 cycle. At 20 years old, I made over $100,000 from trading alone. By any measure, I had made it. And that was exactly the problem. At some point, my life had become a loop. Wake up, open the charts, execute the strategy, close the trade, check the dashboard, payout confirmed, open Skyscanner, find somewhere new to go, fly there, have a good time, come back. And don't get me wrong, the results were good, consistently good. But consistency, when you stopped growing, feel like stagnation. I had spent years building a strategy that worked, and now that it worked, I had nothing left to fight for. And trust me, profitable and fulfilled are not the same thing. I was making money, I was living in Dubai, I was teaching hundreds of students my strategy, and I was bored. Not with trading, with the ceiling. Then I found the World Trading Championship, the Robbins Cup, and the moment I saw the leaderboard, something shifted. Not excitement, not motivation, clarity. I closed my laptop and made a decision. I stopped teaching. Not because I didn't care about my students, but because for the first time in years, I had found something that genuinely scared me. Something that I didn't know if I could win. And I knew that to figure it out, I needed to be all in. No live session, no split focus, and no distractions. Just me, the chart, and the championship. But before, let me explain what the Robbins Cup actually is, because it's not what most people think. This is not a prop firm challenge. There are no rules about maximum drawdown before you get cut. There are no arbitrary target to hit by a deadline, and it's not a firm that gives you leverage and keeps a percent of your profit. You take your own capital, you open a real broker account, and you trade for 3 months. At the end of the quarter, only one number is important: your percentage of return. That's it. Nothing else. The best trader in the world entered this competition. The leaderboard is public and everyone can see exactly where you stand. This was the only trading competition where the only variable is skill. But before I could compete, I had a problem. My entire career had built inside the prop firm world. Every backtest, every calibration, every statistical model, all of it optimized for that specific environment. And when I say optimized, I don't mean rules, maximum loss, target level. That's the surface level. I mean the actual market mechanical underneath. Spread, commission, swap, slippage, execution, offset, all of this. When you run a mechanical strategy, and mine is 95% mechanical, these numbers are not details, they are the strategy. A setup that is profitable at 0.8 pips of spread become a losing setup at just 2.4 pips of spread. A position that works with zero swap became a slow bleed held across the session. Execution offset that's half a second too slow shifts the entry price enough to change the risk-reward ratio on the entire trade. Then I opened the championship broker account. Everything was different. Different spread profile, different commission structure, different swap rates, a completely different set of numbers, and not in my favor. So I logged in for 2 weeks. I went back through every single asset that I traded, every setup, every schematic, full statistical model, but with new number, the championship number. And what I found stopped me cold. 30% of this asset that had been consistently profitable inside the prop firm environment were no longer viable under the championship environment. Not underperforming, structurally unprofitable given the specific market condition. If I had entered the championship without this work, I would have been trading assets actively working against me, and I would have no idea why. I would have blamed the market, blamed the variance, blamed bad luck. So I removed those assets from my watch list. No sentimentality, the data said remove them, and I removed them. Now I was ready to compete. First quarter, same prop killer, same mechanical approach, same method, and full focus. 71% in a quarter, 4th place in the world. Now, if you are thinking I just run my normal risk per operation that is 0.5% per trade for 3 months and landed 71% on a quarter, you are really missing something important. If someone tells you they made a championship level return risking 0.25% per trade, one of 2 things is true. The first, they are lying. The second, I was doing something you don't know about. I called it the variance accelerator model. When you have 15 years of backtested data, you don't just know your win rate. You know the average and the maximum consecutive streaks that the market has produced over 15 years of data. And for the prop killer, that number was 7 to 8 losing trade in a row. After that, statistically, the strategy reset. So if you just had 7 losing trade in a row, what is the probability that the next trade will be also a loser? Very low, significantly lower, measurably lower than any other point in the sequence. So what do you do after the losing streak? You press on the risk. And that's the first trigger, streak reversion. I increase the risk when the data tells me that I've hit the maximum or the average streak of loss of my strategy. The second component is the equity curve. I started the championship risking 0.5% per trade. As equity grew, risk grew with it, accelerating, not linearly. The more profit built as a buffer, the more aggressively I could press the risk, without threatening underlying capital. The peak risk during the championship was 4% per trade, from 0.5 to 4%, not randomly, not emotionally, according to a defined model tied exactly to two variables: equity curve position and strict sequence position. This is not gambling, this is the opposite of gambling. Gambling is increasing your bet because you feel lucky. This is increasing your risk because the statistical condition of your own strategy, verified across 15 years of data, tells you the probability distribution has shifted on your favor. This is how 76% of gain happened. Not despite the strategy, because of it. But 4th place in the war was not enough. My goal was never to win once and then disappear. If you win a championship once, people can say it's luck, good market condition, lucky quarter, and really, it can be luck if you win only one championship. But if your name keeps appearing at the top of the leaderboard all the time, quarter after quarter, across completely different market environment, at some point, luck stopped being an hypothesis. My goal was to become the trader with more championship trophies than anyone else on the board. Enough trophies to make the word luck impossible. Quarter 2, same prop killer, same calibration, same variance accelerator model. No adjustment for ego. The strategy said what to do and I did it. 58% of gain. 1st place, world champion at only 22 years old. From Sicily, no university degree, no family connection to finance, no starting capital. The same strategy I built alone in a room in Bologna, saving my parents' money instead of going out or eating properly. Won the oldest trading competition on the planet. And I'm not done. I'm telling you this not because I want to impress you. I'm telling you this because the story you just heard has a question hidden inside of it. I spent years building a strategy so mechanical, so data-driven, so precise that it won the World Trading Championship. And once you get to that level, once you understand market deeply enough, you start asking different kind of questions. Not how do I get more consistent, not how I manage my risk better, something that most traders would call it impossible. Does a 100% win rate exist, or it is just an illusion? That question is what my next video are going to answer. Not with theory, not with backtest, with what I actually found. If that interests you, you know what to do.